Cardano and Ethereum are the crypto industry's heavyweights that rank among the top 10 cryptocurrencies by market cap. They share striking similarities in design and configuration, but there are some subtle differences between the two. And according to Bitboy Crypto, Cardano may leverage those differences to surpass Ethereum. Whether Ethereum or Cardano is a better buy is a matter of contention and could depend on your investment preferences. Ethereum is considered to be the safer investment of the two, and experts claim that it is more likely to survive in the long term due to its larger development community and ecosystem. But on the other hand, Cardano could be the best long-term acquisition as a result of its potential user base in emerging and frontier markets. From a more realistic perspective, Ethereum is the older, more established, and more valuable of the two cryptocurrencies. When it comes to smart contracts, the leading altcoin is brimming with development. According to an expert, Cardano is lagging behind Ethereum in key areas. Quote, Cardano's developers are still working on key features and services like smart contracts, which have just been added. This feature was first introduced by Ethereum several years ago. End quote. This was said by Martin Lynn Weber, a digital assets product strategist at index provider Market Vector. However, Ethereum's popularity is tied to higher costs. Both cryptocurrencies charge fees for using them in transactions, but Ethereum's is considered to be higher. Plus, a crucial part of being a good Layer 1 crypto is that the blockchain infrastructure enables scalability. The Cardano system is much more scalable than Ethereum and can handle more transactions. Ethereum struggles with transaction volume. When things are calm, the network does fine, but when a bull market starts and millions of new investors get into crypto, Ethereum just can't keep up. The Ethereum network is plagued with different weaknesses, which could eventually make it subject to Cardano's dominance. If these weaknesses are not taken care of, it would be a disaster. Recently, Ethereum reversed to the already forgotten price range of $1,200, which has been intimidating investors for the last few months. Despite expecting the 50 BP rate hike from the Fed, the market got caught up in the cold shower during Jerome Powell's press conference, when he reassured journalists about the Fed's target for inflation, which remains at 2%. As a result of his speech, Ethereum and other digital assets quickly reversed from their highs as investors found out the easing of the USA's monetary policy would not happen until around mid-2023, in the best case scenario. Ethereum might have to move upward in the foreseeable future, considering the recovering network activity that is expected to fuel Ethereum's burn rate, but Cardano might surpass it before this happens. After the arrival of the merge update, the crypto market is looking forward to the Shanghai update of Ethereum with bated breath. The fear that something could go wrong with the next hard fork is quite evident. Shanghai will bring forth fragmentation to increase network speed and reduce transfer rates. The Ethereum Virtual Machine, or EVM for short, may also be affected since 5 proposed changes have been made to the EVM. If developments go well at a smooth pace, Shanghai is likely to hit the main altcoin network in March of 2023. The massive sale that is expected to occur with this update is surprisingly the greatest fear of the crypto community, as the upgrade will bring liquidity to Ethereum. Therefore, the cryptocurrency units that are staking on Beacon Chain will be released for trading. Beacon Chain was developed to ensure a safe change from Ethereum's consensus model to proof of stake, and with this strategy, users who trust the potential of the leading altcoin could start staking Ethereum. To help the network check if the proof of stake process was running the way it should, crypto depositors validated blocks that had no transactions. Thus, with the arrival of this update, Ethereum would have a secured network for common users and projects that use its blockchain. In addition, with Ethereum locked, even with the arrival of the merge, developers have the assurance of network security without a sudden variation in activity occurring on the Ethereum blockchain. However, it is worth mentioning that there may indeed be selling pressure on Ethereum, and even if investors who trust in the network decide to keep their Ethereum in storage, short-term investors may not be so confident. In lieu of this, investors may panic, believing that the unlocking of the Ethereum from the staking contract would be a catalyst for selling. When Beacon Chain launched in early December 2020, Ethereum was exchanging hands at $610. Although a 94% increase from its current price, many Ethereum depositors on the Beacon Chain saw the altcoin grow to $4,891 per coin. With crypto fundamentals getting stronger and the arrival of Ethereum 2.0 inching closer, the chances of Ethereum getting back to that level are high, thus preventing long-term investors from making massive sales. However, if the table flips and a situation occurs when sales are made and the price of Ethereum falls, the altcoin becomes more attractive for staking. There will also be an increase in rewards, and the entry price to earning income from holding the altcoin will be lower, encouraging more investors to join the proof-of-stake network. It looks appealing, yet quite risky. Anything could go wrong, and this shortcoming might pose as a catalyst for Cardano's rise. Also, the Cardano founder, Charles Hoskinson, has so many plans in general for Cardano, and they are all mind-blowing plans which are definitely worth anticipating. Last year, in a Periscope stream, Charles Hoskinson unveiled some of his plans for Cardano. He highlighted that Cardano already has the technology that will enable the smart contracts platform to make a big splash in the nation's sector. Quote, "What's cool is that a lot of these problems about metadata, identity, authentication, and problems about governance, we have native capabilities built into Cardano, from Catalyst to our metadata standard, to how we handle native multi-assets. I think will make us probably long-term one of the best platforms to issue, curate, and transfer an NFT from one party to another party." Hoskinson also revealed that they plan to succeed in the NFT space by anticipating the trajectory of the business in the next decade and a half. In the short term, Hoskinson noted that they were starting to team up with the largest names in the NFT marketplace. He added, "That said, it's easy to clone these protocols. It's easy to partner with these. Just in NFTs, we have already approached several of the top 10 marketplaces and have already begun discussions porting them over to Cardano, because why not? It is an easy conversation. It's just engineering resources, and we are scaling up capacity there specifically for these types of relationships." Currently, several major improvements to the Cardano ecosystem have been revealed by the various developers in charge of the operations. It's interesting to know that Voltaire is on its way, and there is the latest development of CIP 1694. This innovation is a mechanism for on-chain governance that will be a precursor to the transition to the Voltaire phase in Cardano. Plus, the proposal presented by a developer, Jared Corridouan, in late November is now in the voting process. According to Hoskinson, Voltaire, which is intended to be the last stage of development of the Cardano network, will set the pace for the entire industry as to how decentralized management is done. Another notable and recent innovation is the development of the price index for ADA by the DC Spark team. The idea is that the index can be deployed locally and for free without the need for an API or a third party. The index already has the support of the 3 largest decentralized exchanges on Cardano by TVL, namely MinSwap, Ringriders, and SundaySwap. In addition, Cardano remains one of the most actively developed projects in the crypto industry. These catalysts look enough to help Cardano surpass Ethereum, but the bitter truth is that these price conditions of ADA badly need to improve. Many investors consider Bitboy's opinions of ADA beating Ethereum as a deceptive fable. According to a recent report from a popular crypto trader, Jason Pizzino, Cardano is likely to decline further to just below 20 cents before finding support. He said that it was important to wait and see whether this gets a bottom pattern forming eventually and then a breakout to the upside. He also updated his outlook for other cryptocurrencies and stated that it was going to take a long time for cryptocurrencies to reach these predictions. Overall, this is going to take a long time for a lot of these cryptocurrencies. They have barely tried to test the bear market downtrend on the logarithmic chart and for the linear chart. They continue to break down to test the previous resistance levels. We are basically sitting in a no man's land right now for ADA, so there's going to be a fair bit more pain here involved over the coming weeks and months, he explained. Cryptocurrency has gone through a tumultuous year, and if Cardano wants to be a present proof of recovery or sustainability, it needs to surpass the second largest crypto by market capitalization. However, Ethereum's limitations are not sufficient for Cardano to leverage. So, which team are you on? Are you on Team Cardano or Team Ethereum? But of course, what are your thoughts on this? Let us have in the comment section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.